Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, khemka. What a volatile day it's turning out to be, at least for the benchmarks. The Nifty at one point in time was just about knocking at that 25,400 mark, but then we took a sharp turn. We came around that, came back down to the 25,200 mark. But then again, just a few moments ago, I saw that the Nifty was clocking in a triple-digit gain. So 160 points up at the current juncture, 25,340. So we are once again making our way towards the high point of the day, which was somewhere around 25,370 or thereabouts. So it has been a fairly volatile day for the market. The index, in fact, if you look at the chart of Nifty, you'll get a sense of how volatile things have really been. We've seen sharp swings on the charts today, but not so for the broader end of the markets, because both the Nifty mid and small cap indices have been fairly strong right from the start of the session. 1.5% gain on the Nifty mid cap index, and that's also reflecting in the breadth of the markets. Over 3:1, that's the NSE advanced decline ratio. 2,300 stocks advancing to just about 660 stocks declining. So yes, very strong breadth, and of course providing a fillip to portfolios as well. So yes, nothing to complain when it comes to the broader end of the markets. But let's see how we shut shop for the day. As I was mentioning, it has been a fairly volatile session, but right now we are making our way once again towards the high point of the day. So let's see, we still have half an hour to go for the market to shut. In terms of sectors, there are quite a few doing well. Of course, metals, they have been, on an upswing thanks to what's happening with, precious metals, and even copper prices, silver prices, gold prices, all of them have been rallying relentless rally in all of these commodities, and that's of course been reflecting in the metal index as well. So the BSE, the NSE metal index is up in excess of 3% or so. 4% at the current juncture. That's the Nifty energy basket. Mind you, crude prices saw a sharp spike overnight, and on a YTD basis as well. If you look at crude, that's been up somewhere around 9 to 10%. And of course, it's providing a fillip to stocks like Oil India and ONGC that have seen sharp spikes today. And the entire energy basket is up somewhere around 4%. Metals a close second, 2.5%. PSU banks extending gains as well. The real estate pocket that has been hammered out of shape. Today, it's witnessing buying interest, 1.5% gain on the Nifty real estate index as well. Autos also doing well, but what's not doing all that well is the FMCG pocket. The Nifty FMCG index is down almost 1%, and the pharma pack as well out of favor. Plenty of high flyers in the market, some of them, especially on the mid-cap side, some of them reacting to numbers, but if you talk about defense, that's really been the flavor. Because of course, as we approach budget, the question is whether or not there will be a higher outlay for defense spending, with what's happening world over in terms of geopolitics. World over, nations are, hiking their defense spends. So let's see whether, that happens in the budget this time around or not. Just taking note of some of the individual movers then. Bharat Electronics, as I was talking about defense, that stock is the top Nifty gainer, up almost 10%. Numbers came out pretty solid. We'll take stock of that as we go along. ONGC 9%, Eternal as well, seeing good gains, 5% gain on shares of Eternal. Coal India, Hindalco, these are some of the other movers. Shriram Finance, even Trent for that matter, is on the gainers list. And M&M, that was the top laggard yesterday, has edged back into the green. That's up 1.5% or so. On the flip side, Tata Consumer down 5%. Numbers came out yesterday. Asian Paints continues to see red on the screen, 5% down on Asian Paints. Numbers were disappointing. Yesterday it saw a 5% cut, and today as well, 5% kind of a downtick on an Asian Paints. Maruti Suzuki came out with numbers. Margins were a miss. Of course, it was a one-off expense that weighed on margins, but the stock tanked somewhere around 4% after numbers came out. But right now, it's down 2% or so. Even Eicher Motors, for that matter, it's out of favor, and so are names like Sun Pharma and Dr. Reddy's. So all in all, texture of the market is on the upside. We are making our way towards the high point of the day, and the mid caps are in fine fettle. Let's hope that we end the session for the Nifty above the 25,300 mark as well. But to understand the texture of the market, what one should be expecting from the budget, and what the overall sentiment and construct is looking like for the market, let me bring on board Karan Aggarwal, co-founder and CIO at Ametra PMS. Karan, lovely chatting with you this afternoon. First of all, 2026 has started off on a very volatile note. In fact, if you look at today's market, we've seen some very wild swings on the Nifty. What is the overall construct looking like, and what should one do to navigate this bout of volatility in the market?
Mhm. See, the thing is, the story of 2025 was that mid-cap and large caps were going through time correction in a range-bound trade. And while market was waiting for EPS re-rating to start next leg of bull rally. On the other hand, small cap, because their valuations were quite high and EPS profile was actually even weaker than large cap, they were going through severe price correction. What has happened in last 4 weeks, we have seen a flurry of results. Results have been underwhelming on large cap side. You have seen the result from bank, which have seen the NIM compression. IT companies, as usual, the results growth rates are in low single digits. Reliance is also struggling for a change. So in general, the result expectation that was around 8 to 10% EPS growth, it's now been moderated to around 3 to 5%. So that's, and add to it the flavor of currency depreciation. Okay, that is also
Hmm.
resetting the valuation dynamics. So that's why we have seen a unabated
Hmm.
FII selling that we have seen in the market. And markets actually, the problem with the large cap is largely that it has breached 200-day moving average support 1 week back. Okay. Historically,
Hmm.
whenever 200-day support is breached, there is a buying. Markets typically try to basically win back 100-day moving average by a spike of 3 to 4%. But usually, it followed up by a further dip. And his, historically, if you look at the last breaches that was seen in 2023 and then in 2024, mostly we should see bottom forming in next 2 months somewhere around 5% below
Okay.
present 200-day mark. That is coming out to be around 23, 600, 700. That's a possibility based on historical
Okay.
trends. If EPS re-rating triggers in, let's
Hmm.
say EPS re-rating comes into the picture and the result season is only half of the result season we have seen, maybe next half would be make up for the deficiencies that we have seen in last 2 weeks. Okay, then we might see 200-day moving average become a support. It happened once in October 2023 when there was a EPS re-rating for Indian corporates.
Hmm.
So there are both instances,
Sure.
but 200-day breach, the key highlight, if we say for last 1 month, is the breach of 200-day moving average for Nifty 50.
Hmm.
That has not happened since April 2025. Okay, but
Sure.
having said that, if there are
So,
few positive triggers, which, yeah, please go ahead. Yeah.
sure, 3 to 5% EPS growth. So when do you expect some bit of recovery to trickle in when it comes to earnings? Because the expectation was that third quarter onwards, we'll see a recovery take shape, and perhaps fourth quarter is when we'll see earnings come back in full swing. So for
Yeah.
FY27, what is the earnings expectation estimate? A double digit kind of growth is ruled out according to what you're saying.
I think FY27 expectations are quite far, looking at what has happened in last 1 month, looking at whatever we have for Q3.
Hmm.
In Q3, we were expecting a earning rebound, especially for banking sector. NIM compression was supposed to go away. The thing is that the right now the problem is the rate cuts that are coming given by RBI. Okay, uh, they are eating into the margins as of now because the deposit growth is quite weak
Hmm.
for banking sector. In general, is lagging at around 8% to 9%. Loan to deposit ratio has to be maintained by has to be maintained by banks. Okay, so they cannot reduce the deposit rates. While on the loan side, they keep reducing the rates to win the market share. So that's what actually weighing on the banking. Okay, Reliance is basically have started to depreciate its 5G infrastructure, so there is a down pressure on EPS numbers there as well. So we think that RBI rate cut cycle should be over in next 2 quarters, and then we can see a real recovery led by
Hmm.
banks. Okay, on the margin side, on the EPS side,
Okay.
we think that ideally the estimates of 13 to 14% for FY27 looks quite far-fetched as of now, but it seems like early teens EPS growth rate can be seen from quarter 3 to FY27, and we see how it turns out in the last 2 quarters of FY27. That would be the deciding factor.
Okay, so single digit EPS, high single digit EPS growth from third quarter of FY27. That's what you're saying. All right.
We think the
Looking at some of the
early
other
teens,
sectors
we
that
can
have
see. Yeah, please go ahead. Yeah, please go ahead.
early teens. All right. Okay, got your point. Looking at some of the numbers that have trickled in, especially for the auto universe, Maruti's reported numbers. Numbers look okay, but there's been a one-off, that's weighed in on margins. But overall, for the auto universe, the volumes have been pretty solid, especially after the GST cut. You could say
Yeah.
this is one sector that has benefited the most out of the GST cut. But with input
Mhm.
costs rising in terms of commodity costs, and of course, now that the
Mhm.
India EU FTA has been finalized, that will bring down tariff on the EU cars, right? The German cars, and that would cheaper German cars or European cars would make way into the Indian market as well. So that kind of complicates the competition landscape as well. So how are you viewing all these factors for the auto universe, and do you have a preference whether one should look at auto ancillaries, or one should look at premium players, or one should look at more domestic oriented names? How would you approach the auto space?
Last 3 months have been pretty good for auto sector. Okay, we have seen that the sector which has been languishing in negative growth or low single digit growth has zoomed up to 20-30% growth that we used to see some few years, I would say 4 or 5 or 6 quarters back. Okay, so that surely would be get reflected in numbers. If you look at the TVS numbers that released few days back, okay, so there was top line and bottom line growth of 30 to 40%. Having said that, I would say that auto sector EPS growth or the volume growth has we can say to a large extent, it has been peaked out. Okay, so whatever discretionary spend push that was there due to GST cuts, that has already played out to a large extent. We are looking at a somewhat challenging environment going forward. As you rightly said, the input cost is supposed to rise with the metal inflation. We are looking at the environment. If you see the global environment, EU, India, FTA, yes, in premium segment there would be higher level of competition. There's been news that South Africa is thinking of imposing tariffs on Indian and Chinese car
Hmm.
imports. So overall,
Chinese
the
cars, yeah.
export market,
Hmm.
we see the export market that makes a significant portion of Indian automakers, especially car makers. Okay, that can see some stress going forward. Okay, so we believe that the
Hmm.
profitability on auto sector side for now, for some time, quite some now, it has peaked, and growth expectations have to be moderated in line with the changed realities. But having said that, grow
Hmm.
on rural demand is still we can say it's in buoyant stage. Okay, so we have if we have to bet in auto sector, we would go for the companies which are in tractor or maybe two wheelers.
Okay, tractors, two-wheelers looking more attractive, and of course, growth expectations have to be moderated when it comes to the auto space. How's your
Yeah.
positioning like on defense? Because defense has been the flavor of the day. In fact, stocks have been perking up in the run-up to
Mhm.
the budget. Of course, we know how the geopolitics situation is world over. Nations are increasing their defense spends. What are your expectations in terms of defense spending when it comes to the budget? And what's your preference when it comes to the defense names? Would you be more tilted towards defense PSUs or the smaller defense names? Uh, what's your positioning like? And in terms of order book as well as execution, any preferences?
See, the problem with defense sector in especially in last 12 to 24 months have been the obscene valuations that we have seen in the space. These valuations are kind of right now taking account of 5 to 10 years of delivery already. Okay. If you look at the Cochin Shipyard, Majgaon Docks, BL, HAL is growing at somewhere around 10%. Okay. So, and valuations are in the range of 40 to
Hmm.
50x earnings. Okay. So we see defense is more of a
Hmm.
sentimental play. Yes, we are looking at a change geopolitical scenario where it seems like US is growing from a lot of places and entering into some new places. Okay, and people are, there are a lot of rumors around, Chinese invasion on Taiwan in the near future, or maybe some action on Indian side. Okay, considering the change scenario, we see order books booming. The capex, public capex, we expect it to increase to somewhere around 13 lakh crore in budget, and a big chunk of it will go to defense. So order flow would continue. Okay, but I still see defense as a more of a sentimental, opportunistic play, because the valuations as of now, as I already mentioned, is taken account of 5 to 10 years of earning already. Okay, so if you get new order book or a global change geopolitical scenario, there are some opportunities. There sometimes there would be some opportunities come our way, but as of now, it's if you look at this pure in terms of risk reward ratio, sector is looking much less attractive than it was 2 years ago.
Okay, got your point. What about commodities? We've seen a tear away rally, and there's no let up, right? Look at gold, silver, all of them have been rallying. So how does one really ride this metal rally? Do you think it's too late to get into say a gold ETF or a silver ETF? Would you suggest playing this theme via stocks or physical commodity, or would you look at ETFs? But at this rate, what should one do?
See, the thing is, if you see gold and silver, typically its relative valuation is seen in gold to silver ratio. Basically, it tells you how many ounce of silver are needed to buy 1 ounce of gold. Okay, till just few months ago, it was hovering around 80. 80 basically indicate 80. If a gold silver ratio is around 80, it basically is a very strong bullish signal. Okay, even near Diwali, even after rally in August September near Diwali, okay, it was around 80 only. Okay, so there was a lot of scope for rally, but in last 3 months everything has been covered up. Right now the ratio is between 45 and 50. On silver, risk reward is not very good as of today. Okay, the last rally that we have seen from 91 to 2011, the overall 20-year precious metal rally, that indicate that ratio can now move again to 70. So we would suggest people to keep accumulating gold at every dip. For silver, actually, we see there might be some 10 to 20% rally from these levels. But overall, in 6 months to 24 months, next 6 months to 24 months, we see some 50% dip from those levels that these highs. Okay, so we believe that gold can be accumulated. It will continue.
Did you say 50%?
Silver rally.
Did I miss it? Did you say 50%?
Yes, 40 to 50% dip from these levels, going by historical precedents. Okay, for silver.
Okay.
For gold, it can continue, and then we will see a next leg of rally that will take silver to new highs. Okay. Then the ratio, because we expect the ratio to rise to 70 from these levels again. Okay. And then in the next leg of rally, it can fall to 20. That would be the end of rally. That's typically 20-year cycle. We are in the 7th year right now. Okay.
Okay.
So this is how it plays out. 2 or 3 different cycles, 3 to 70 before it crashing to 20 and end of the cycle. I'm not saying that we are at the end of the cycle, but people who have missed out on rally can get a decent opportunity in next 6 months to 24 months.
Okay, all right, got your point. One last question, I'll have to let you go. What's on your wish list when it comes to the budget? What would you like the finance minister to do?
So that's a very difficult question. But the thing is, we would definitely like to let go of LTCG for FIIs because most of the geographies, if you see US, UK, Europe, very few countries basically apply LTCG on foreign investors. Our markets have been suffering for quite a long time. Okay, that would be a good relief. That would basically improve the risk reward for foreign investors, and maybe that might lead to a bit of a slowdown in FII outflows. On the side, we would also like LTCG to not increase for domestic investors. Typically, it's a government want to make it revenue neutral, but they might we will basically expect government to let go of some short-term revenue for long-term gains.
All right, that's the expectation from the budget. With that, Karan, would like to thank you for taking out time and joining us and sharing your thoughts. Look forward to our next interaction as well pretty soon. But thanks a lot for taking out time and joining this afternoon.
Thanks, Nandita. Pleasure speaking to you.
Thank you. On that note, it's been a very volatile day, at least on the index front. We are now back above that 25,350 mark. Within seconds, within minutes rather, the texture of the market or the texture of Nifty is changing. We are now seeing a 180 point up move on the index. We had given up most of those gains around 2 o'clock. We were around the 25,200 mark. And, once again, we're back near the day's high. 25,350 is where we are perched, and the broader end of the markets, they have picked up further steam. Look at the Nifty Midcap Index, now almost a 2% gain on the Nifty Midcap Index. Breadth extremely positive. 2,300 advances on the NSE, the Bank Nifty as well up 400 points. So it's a 59,600 that's on the screen for the Nifty Bank Index. But before we get on board our technical guest for the day, I just want to see or take stock of some of those high flyers within the mid-cap universe. On the Nifty 500 Index, you have Tejas Networks. That stock is up 16%. We do see these on and off pops on the share prices of Tejas Networks, and today happens to be that day. But aside of that, if you look at some of the other defense names, the Nifty India Defense Index is also fairly buoyant, of course, in the run up to the budget. But look at data patterns, that's up 15%. Some of the other Astra Micro, Bharat Electronics, these are also up and about. Mazgaon Dock. Quite a few of them, and all of them are gaining anywhere between 7 to 15%. So that's the kind of move. And Bharat Electronics, by the way, reported very strong set of numbers as well. But aside of that, some of the other movers include the likes of MCX. We've seen MCX hitting record highs consistently today as well. MCX 7% up. Of course, it's a proxy to some of these commodities as well, which is why I think we are seeing such a sharp uptick in share prices of MCX, although exchange stocks of late haven't really been doing all that well. But on that note, let me bring on board our techie for this afternoon, Ashish Bahety, Technical and Derivative Research Analyst at ProfitMart Securities. Ashish, lovely chatting with you. But first of all, tell me, what do you make of the wild swings that we saw on the index today? We're now, of course, making our way back towards 25,400. But in the run up to the budget, do you expect these kind of volatile moves, at least on the index front?
Good afternoon, Nandita. It's been a good day, I'll say. After considering the continuous fall we have seen after hitting all-time high in the month of Jan, there's a bit of good recovery, and 25,000 again acted as a good support area from there. From that zone itself, we have seen a good buying interest. So that still cements 25,000 as a strong support on the downside. However, on the upside, we are still below 20 daily exponential moving average on the daily charts. So there's a long way to go. There's a resistance near 25,700. But however, if we break that, then we can assume a fresh move from there. So on the upside, there are multiple hurdles. 500 becomes the 25,500 becomes the first zone of resistance, and followed by that 25,700. However, whatever we are witnessing is a pre-budget rally kind of a thing, and there's sector rotation happening. We've seen continuously metals and PSU banks showing strength. Now even the other names are also joining. Good to see defense moving in this way before the budget.
Okay. Okay, fine. But what about the Nifty Bank Index? What is the setup like? Because Axis Bank numbers have been fairly good, and today it overtook Kotak Bank as well in terms of its market cap. This is an earnings fueled rally on Axis Bank, but within the large cap names, which ones do you prefer? Post numbers, HDFC, ICICI came out. Kotak was a disappointment, but Axis clearly seems to be a winner within the large cap private bank names.
Certainly, the leadership pattern is changing in the banking space itself. We've seen Axis and both SBI doing fairly well. Or there's a huge relative strength in these two banks compared to the other set of peers. On the private sector side, yes, Axis looks very strong on the chart, despite a bit of cool off in today's trading session from the intraday high, which it made near 1360. However, this dip can be used as a buying opportunity. Bank looks really strong on the charts, and we are assuming that we might see 1400 kind of a level soon on the Axis Bank. However, ICICI is still looking good. I mean, there's a bit of rally today also. Yesterday, we've seen some reversals. Stock is trading below its 20 daily exponential moving average. So, out of the private sector banks, Axis and ICICI both remains our top picks. However, there's more strength on the PSU side of the sector.
All right. What was the BTST strategy you had for today? I mean, I know just three odd minutes to go for the markets to shut, but what do you like in this market? There are quite a few mid-cap high flyers today. Anything that catches your attention?
So defense is one sector which is really looking good on the charts and the way the buying has emerged. So HL remains our top pick. We have even suggested in the morning show in your channel. However, even at these prices, it can be chased. The stop loss which should be kept near 45.50. On the upside, we are assuming 4800 might be on this chart on HL.
Okay, HAL. But BEL also deserves mention. The stock is up and about almost 10%. Numbers were fairly strong as well. But another stock that's in focus today is Maruti Suzuki. Numbers came in, and if you strip off that one-off expense that it had, numbers weren't all that bad. But the stock is down 2%. Yesterday we had M&M that shed somewhere around 5% as well. Of course, the India EU FTA, there's some concerns about heightened competition from European brands and cars, right? So how do you look at autos? Anything that's worth a trade now?
The auto was the first one to rally in last 3 months or the last quarter, and we've seen some profit taking happening in these auto stocks. From the entire auto pack, two-wheeler space looks impressive compared to the four-wheeler auto sector. So TVS and Bajaj Auto remains our top pick. However, Bajaj is a bit down today, but that can be used as a buying opportunity. So from the auto space, TVS and Bajaj is on the buying space.
Okay, TVS and Bajaj. I think TVS came out with numbers and that was a strong set as well. So those are the two stocks from the auto universe that has got Ashish's attention. But let's take stock of the market close. Ashish, hold that thought. I'll come back and we'll discuss more stocks. But let's take a look at where we are shutting shop for the day, 25,347. We'll wait for these rates to settle, but not complaining given the kind of volatile day we've had. And tomorrow it's the Sensex expiry as well. So expect a fair bit of volatility tomorrow as well. But today, given the kind of volatility we saw, a triple-digit gain on the index, one would be happy with that. And also the fact that the mid-cap index was fairly buoyant, almost 2% gain, 1,000-point rally on the Nifty mid-cap index. Yesterday as well, the mid-cap index staged a good recovery from the day's low, and the breadth also improved. But today, the breadth is extremely solid. 3:1. That's the NSE advanced decline ratio. So some good gains for portfolios, and investors and traders would be happy. But in terms of the other indices, just want to take a look at the Nifty Bank Index, almost 400 points up, 59,600 around that level on the Nifty Bank Index. And energy, that was one pocket that was buoyant today, 4% move. Crude, of course, saw a 3% surge overnight, and on a YTD basis as well, crude prices have moved up 9 to 10%, in the wake of all the geopolitical concerns. So yes, ONGC, Oil India, these are some of the stocks that have seen good gains in excess of 7 to 8% in today's session. Metals, I mean, every day we talk about metals, and it's just another day that we've seen a 2.5% gain on the Nifty Metal Index. We'll take a stock of the names. If you look at some of the names like Hindustan Copper, another 13% up on a Hindustan Copper. I don't know how one can, catch the top here on Hindustan Copper. Other gainers include the likes of Nalco, Vedanta, Hindalco, Jindal Steel, all of these stocks gaining anywhere between 3 to 6%. But yes, Hindustan Copper was the big gainer today. Vedanta as well, of course, it was it was to offload 1.6% stake in Hindustan Zinc via the offer for sale route. So Hindustan Zinc should also be pulled up. I think it was seeing cuts of somewhere around 3 to 4%. We'll talk about Hindustan Zinc with Ashish as well. But PSU banks, autos, IT, all of them were up, barring pharma and FMCG. All the other sectors were gaining, and even a surprise gainer in the form of the realty index. This index has been hammered out of shape even on a YTD basis or year-to-date basis. We've seen the real estate index bearing the brunt of a very, very brutal sell-off. But today is a good day for real estate, up 1.5% on this index. In terms of the frontline gainers, Bharat Electronics, ONGC both gaining in excess of 8%. Coal India up 5%, Eternal up 5%. You've got names like Power Grid. They were up 2%, Trent as well up 2%, M&M, yesterday's big loser, was up almost 1.5%, Ultratech Cement, TCS, Adani Ports, these are some of the other names. Tata Consumer, although, is down somewhere around 4.5%, some earnings reaction there. Asian Paints extending its extending its slide, so to say, after earnings disappointed in the third quarter. Maruti, Max Healthcare, some pharma names like Sun Pharma and Dr. Reddy's among the laggards. Coming to you then, Ashish, we're talking about Hindustan Zinc. Any dips should be bought into in some of these, metal-related plays like Hindustan Zinc, Hindustan Copper. What are your thoughts? Still more upside left, and all those dips, should they be used to get into these stocks?
Certainly. I mean, now the play is pretty simple here. It's more of a trading stocks rather than a portfolio bet right now. And most of these stocks still have a lot of headroom left. The way metal prices are surging, there's no respite. I mean, this completely we are seeing a short squeeze in the both bullions and as well as the industrial metal side. Hindustan Zinc probably was down because of the OFS news. However, this can be acted as an opportunity here. The dip can be used as a buying for the buying purposes. On the downside, 690 is a strong support area. On the upside, we assume that Hindustan Zinc might even touch 750 plus level.
Okay, 750 plus levels, potential for the stock to hit those levels. But Asian Paints, seen red on the screen post numbers. In fact, today we had a few brokerage notes on the numbers as well, particularly pointing out what HSBC had said. In fact, it has downgraded the stock to hold. Target price has also been cut to 2,900 rupees. And they mentioned that the relatively weaker retail demand trends could persist longer than expected. And, the risks for FY27 are largely skewed to the downside. Of course, we've seen how things have panned out with Asian Paints, but off late, last 2-3 months, we saw a good buying spurt coming in for Asian Paints. Competition fears were easing, and the stock was seeing good performance. But would you see a trend reversal post numbers, or would you say that perhaps this correction that we are seeing on the back of earnings is an opportunity to get into the stock, at least for the medium term?
No, the way the stock has corrected in the last 2 days after the numbers, which is a bit of alarming because stock has touched its 200 DEMA, and if it slips below 200 daily exponential moving average, we may see more further selling here. Our advice is to stay away from this counter at this point of time. Even the commodity cycle as a whole is on an upscale. So these companies might have more trouble going ahead. So on the downside, if today's low gets broken coming trading sessions, we may see even 2300 on the chart. So a bit of cautious is required here.
Okay, bit of caution required when it comes to Asian Paints. Of course, the stock below that 200-day moving average as well. But what about some of the other consumption names, especially FMCG names like Marico and Tata Consumer? Tata Consumer was down somewhere around 5% almost. And Marico, on the other hand, reported a good set of numbers, but the stock is down 1% or so. Tata Consumer from the FMCG pack has been an outperformer. If you see last few months, how would you navigate the staples universe, so to say? Would you look at Tata Consumer, or would you look at some of the larger names like HUL, or would you look at Marico, Dabur? How would you really look at this space?
See, these stocks are reacting a lot to their numbers, and we've seen both Tata Consumer and Godrej CP reacting fiercely to their numbers. Tata Consumer was like down almost 4.5-5% in today's trading session. So our advice is not to catch the falling knife here. There can be more downside here because the way the price volume action speaks that there's still more headroom for the selling side here. On the if somebody has to pick up any FMCG company, I will say Nestle is still looking relatively better on the charts. Stock is hovering near 1300 zone, and if it's able to break above 1310, we might see even 1350 kind of a rally here in Nestle's chart. So out of the entire FMCG pack universe of the segment, Nestle looks good on the charts.
Okay, Nestle, that's the preferred pick from the consumer staples basket, the FMCG pack, so to say. But what about some of these names like Bikaji Foods and Gopal Snacks? Would you be looking at snacking on them, because numbers have been fairly good? Stock performance wise, Bikaji, has seen a fair bit of pressure. But do you think some of that buying interest, will come back into these stocks after today's move?
See, I think out of the two, both Bikaji and Pratap Snacks, Pratap Snacks looks good because the reversal got sustained in during today's trading session. The stock was up by almost 3.5 or 4%. So if there's a follow through buying happens tomorrow here in this counter, we may see even stock heading back to 1200 plus kind of a level. So tomorrow is a wait and watch day for Pratap Snacks. If its stock sustains about 1110, then there's a buying opportunity here on Diamond Snacks. On the downside, 1091 should be kept as a stop loss zone.
Okay, that's about some of these snacking stocks. Some of them did fairly well today, and you have Pratap Snacks on your screen, up 3.5% to thereabouts. But there's one stock I want to talk about, and that's Car Trade. Reported numbers looked fairly strong, but looks like the street was looking past the numbers, and the stock did see quite a bit of a selling pressure. The stock is down 25% in the last 3 months. Would you say that it's up near about its bottom, or would you see more downside from here?
So, I mean, in today's trading session, you've seen a good spurt in the volume. There's almost a 2.5 million share kind of traded today, and there's a downside take to it with that. So, stock was down almost 5.5%. On the downside, we assume that stock may even test back its 2200 kind of a level. So, another 200 points kind of a fall may be possible here. So, anybody who's holding long, it's a good time to probably book some profit here in this trade.
Okay, that's about Car Trade. Vishal Mega Mart is the other one that reported numbers, and the stock was down quite a bit, 4% or so. Some of these retail stocks haven't really picked up steam even after the GST cuts. So, how would you look at Vishal Mega Mart in particular, post numbers?
So, just give me some. I think there's a bit of pressure on the stock, but however, stock is now trading at near its support zone. We've seen even last year in 2025, stock made a base near this zone of 120 and then bounced back to almost 150 kind of a level. So this looks good on the charts as a support area. We may see some reversal from here or some buying interest. However, a fresh buy should be initiated if the stock surpasses 123 on the charts.
Okay, that's about Vishal Mega Mart. But some of these capital market plays like Motilal Oswal, reacting to a good set of numbers. Profits were up 6%, revenue grew 18%. The stock otherwise has been flat over the last 5 days. 1 month, last 1 month hasn't been all that great. But with today's move, would you look at levels of 800, 820 plus on the counter in the coming days?
So yes, the industry capital market theme is looking good, and we've seen a bit of correction in this space as a whole. So Motilal is looking good. I mean, we've seen a good reversal today. Today's trade was like almost stock was up 8%, and with the volume, with a good set of volume numbers. So 800 stock may rally up to 850 in the near term. So this dip can be used as a buying opportunity, but one should keep a stop loss near 770.
Okay, keep a stop loss around the 770 mark. MCX hit a fresh high last 1 month. It has seen a very, very solid up move. 19-20% kind of move. MCX, would you look at it at these levels, or would you say that not looking attractive, the risk reward?
See, the stock is surpassing all its target before even the analyst can make a fresh target. So that's been the kind of rally it's been in the MCX. And even at these prices, we have seen there's a good amount of buying interest in both F&O as well as in the cash delivery segment. Just to, put my point, I mean, the stock was trading around 1500 zone in September of last year, and today we have almost close to 2600. The charts looks really strong even at these prices. So any dip can be used as a buying opportunity in MCX. The stocks looks really good on the charts. But however, on the downside, one should maintain a stop loss near 2470.
Okay, 2470, that should be the stop loss. But yes, MCX, quite a performer, hitting record highs today. CG Power is another one, reacting to numbers. The stock was up 10% or so. At 581, how would you approach this stock? Last 1 month, we've seen a good correction, 10% or so. And, on a year-to-date basis, the stock has lost 9% or so. But does this look like, we could see the stock pick up traction once again?
Yes, certainly. The stock is sharply corrected in the last 3 months. It's almost corrected 25%. And probably today was the first day of the reversal. So stock is showing a good strength on the has kind of made a bottom near 550 level. The momentum can be chased, or it can be a counter trade, can be played here for a reversal trade. 550 should be kept as a strong support, as it's the support area. So that's the place where one should keep a stop loss. On the upside, we may see 630 to 650 kind of level.
Okay, that's about CG Power. But let's talk about PC Jeweler as well. It reported numbers, and if you look at the last 1 month performance, PC Jewelers has managed to outperform both Titan and Senco Gold as well, right? Numbers look pretty good. The profit jumped 30%, revenues were up over 35%, and EBITDA saw an 80% jump. Margins were also pretty solid, 23%. How would you look at this particular stock vis-a-vis the other jewelry stocks?
See, and from the entire jewelry pack, Titan remains our top pick, and probably that's the only counter we are recommending as a buy from the jewelry pack. However, considering the surge in the bullion prices, these stock may have some absurd kind of a quarter going forward. Some of them may outperform in terms of quarterly numbers, and some may even underperform as a whole. Coming back to the PC Jeweler, stock is showing strength on the charts. Stock has been trading above its 20 daily exponential moving average. So one may anticipate that stock may move back to 11 and a half kind of a level. But however, on the downside, just keep a strict stop loss near 10.
Okay, that's the view on a PC Jeweler. But just want to talk about some of the stocks that haven't really fired up this year after giving very, very solid returns over the last 5 years or so. I'm talking about Bharti Airtel. So far 2026 hasn't really been great. Bharti Airtel stock has lost somewhere around 7.5 to 8% on a year-to-date basis. How would you look at this bout of correction? Do you think it's time to accumulate, or would you advise traders and investors to wait for some more correction before jumping in?
So, for traders, at least, it's a little wait and watch. But however, for the investors, it's a good opportunity to accumulate the stock. This has been a perfect portfolio stock. Stock commands almost duopoly kind of a status in their industry, and we've seen the ARPUs consistently rising, and the overall chart has been showing good strength. On the weekly and monthly charts, there's still strength on the charts. So this dip can be used as a buying opportunity for the investors. However, for the traders, it's a little wait and watch. Fresh trading buying opportunity should be initiated only if the stock surpasses 1980 kind of a level. But the investors can accumulate here by keeping a stop loss near 1900.
Okay, stop loss of 1900. Investors can accumulate, but traders may have to wait. Before I let you go, Ashish, what's the positioning like before the budget? Of course, we spoke about defense, we spoke about other names as well. But any particular stocks and sectors that one should particularly watch out for in the run-up to the budget?
I think there can be some good packages regarding the export related sectors, which has been hardly badly hit because of this Trump tariff issues. So there might be some sector related focus on those sectors. Apart from that, banking, I think PSU banks is one sector which is really looking good on the charts, and that's where the bet can be placed.
I just want to ask you another question on, since you mentioned export related themes. Yesterday we had the India EU FTA being finalized. A lot of these textile names were, bouncing around, so to say. They were, seeing good buying traction, but they have seen a fair bit of correction, ever since Trump announced those tariffs, right, back in April 2025. But is there a case now, especially post the India EU FTA, to look at some of these textile names in particular?
Certainly, I mean, some of these textile names looks good on the charts. So stocks like, say, Welspun Living is one stock where one can have some, can accumulate at these levels. Stock is corrected sharply from the recent high of 150. And stock is trading above its 20 daily exponential moving average. So we assume that in this space, in Welspun Living, there can be upside in the coming days.
Okay, all right. Those are some of the textile names to keep on your radar. But with that, Ashish, would like to thank you for taking our time and joining in this afternoon. Always a pleasure, and look forward to more chart checks in the coming days as well.
Thank you.
Thanks a lot. Well, second straight day of gains for the market. Of course, we did well, despite the kind of volatility we've been witnessing in the market last couple of sessions. We've done well to, hold on and end above that 25,300 level, triple digit gain, no complaints. And mid-cap index, of course, particularly buoyant, up almost 2%. But, let's talk about some of the earnings that are expected post the market hours. Talking about L&T, according to Moneycontrol poll, consolidated revenue for the third quarter is expected to rise around 16% on a year-on-year basis. Profit is estimated at somewhere around 4,500 crore rupees. That could reflect a near 35% increase on a year-on-year basis. EBITDA margin is seen improving to about 10.3% or so, and that could, of course, indicate a modest operating leverage as well. Now, while near-term order inflows may remain uneven, brokerages are constructive on L&T's earnings outlook. They say that the execution visibility remains strong, and diversified segment exposure and continued support from public sector capex is something that could of course provide support going forward as well. But on that note, just have about a few more sessions to go before we hit Sunday. That's when the union budget will be announced, and the Moneycontrol Deloitte CXO survey has been released on our website. Just want to take you through, how we really conducted this survey. It was conducted by Moneycontrol and Deloitte between December 2025 and January 2026. Now, the survey includes CXOs from across industries such as banking and insurance, manufacturing, transport and logistics, energy, life sciences, health, telecom and tech, and e-commerce as well. Now, more than 80% of senior corporate leaders surveyed expressed confidence in India's economic growth prospects over the next 12 months. Now, on India's overall growth prospects over the next year, 47 CXOs participated in the survey. Of these, 60% said they were confident about the outlook, while 21% said that they were confident. They were just about confident on the economy. Now, taking together, over 80% of respondents expressed a positive assessment of near-term growth. Now, among them, 50% said they were optimistic, projecting GDP growth in the 6.5 to 7% range in the next financial year. Geopolitical conflicts and trade fragmentation, these were some of the issues that were identified as the most pressing global concerns, reflecting worries over the ongoing tensions and shifting trade dynamics. Of course, the delay in India-US trade deal is seen as a top domestic risk. But you can catch all the details on our website, moneycontrol.com. There will be a host of stories, on this survey. You can go and catch it, as well as to what India Inc. is expecting from the budget this time around. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. Of course, have a great evening and come back and join us with the markets once again tomorrow morning. See you then. Thank you for watching.